I know what's good. What's good? What's good? I wanted to chat to y'all for a minute, man. I wanted to show you something because I've been getting a lot of questions. People saying I don't know where to start. Okay, you're telling me to invest. I'm interested. I'm so how do I get started? How do I start to build out my portfolio? How do I know what to invest in? How do I know how to structure it? How do I start? I don't know how to start. And I want to show you a tool, a resource that you should be using. That resource is OpenAI's ChatGPT or any AI. I use ChatGPT. I use Gemini. I use Grok. I use AI every single day. Every single day, whether it's for research, whether it's for content. I use it to make charts for me. I use it to generate images. I use it to analyze stocks. I use it inspiration. I use it for a lot of things. I literally use AI every single day. And if you don't know where to start in your investing journey, you're like, I don't know where to start, man. I don't know where to start. I don't know what to invest in. I'm going to show you how to utilize ChatGPT, which is an AI I'm pretty sure most people have heard of. ChatGPT, I have it pulled up right here, and I'm going to show you how you can utilize it to get it started on your investor journey, man. To get started, and it can give you a lot of useful information, a lot of good information. So let's get into it. So we're on ChatGPT right here, and you like, okay, I started my brokerage account. I put some money in. I don't know what to invest in. I don't know what to invest in. Let's say I want to invest $10,000 in 2025. I want to invest $5,000, whatever the amount is. For this example, we're just gonna use $10,000. Mind you, you can do this with any amount. So I want to invest $10,000 next year. I don't know what to invest in. I don't know how to build out my portfolio. What my allocation should be. So we pull up ChatGPT and let's do this. Give me an investment plan to invest 10K into the stock market in 2025. Show you how simple it is. Okay. It's pulling up prompts. Good information. You don't know where to start. You start here. Start here. I'm gonna break this down for you. I'm gonna show you. Let's go up to the top. Okay. So the prompt I put in. Give me an investment plan to invest $10,000 into the stock market in 2025. Okay, here we go. Step one. Set your goals and risk tolerance. We talked about this. Set your goals. What are your long-term goals? You're investing for retirement, wealth accumulation. What are your medium-term goals? Short-term goals. Short-term goals can be, okay, I want to get $1,000 into Apple stock. Or let's say this, I want to buy 5 shares of Apple stock. That's my short-term goal. I want to buy 5 shares of Apple stock. My medium-term goal can be, I want to invest a total of $5,000 into the stock market by the middle of the year. My long-term goal can be, I want to have $10,000 by the end of the year. Or you can span it out a little more. Short term, I want to invest $10,000 this year. Mid-term, I want to hopefully grow my portfolio to $100,000 in the next 10 years. Long-term goal, I want to have my portfolio at $1 million in the next 20, 25 years. You see what I'm saying? So assess those. Lay out a plan. And stick to it. Assess your risk tolerance. You have a high risk or you low risk. This comes into how old are you? Are you younger? You younger like me? I'm young. I like to invest aggressively. If you're a little older, closer to retirement age, you may not want to invest aggressively. You may want to take a more slow and steady approach. You may want to invest in an ETF like VOO. You know, you may want to invest in something that's not as volatile. You know, high risk, low risk. Only you can assess that. Also, no matter if you're young, you may not want to take on high risk. You may not want to invest in individual stocks. You may want to go the ETF route. You know, slow and steady. You may want to go dividend like SCHD. You know, assess your risk tolerance, and then plan accordingly. Step two: diversify your portfolio. This is important. It's important. You don't want to be too heavy into one thing. You want to be well balanced. So this is the example it's giving you. If you didn't know where to start, this can get your wheels turning. This can get you into thinking about how you want to plan your stuff out. You start here, go dig a little deeper. You know, this is giving you 70% in stocks, growth and dividend stocks, 20% index funds, ETFs, like I talked about, 10% in bonds or cash equivalent. See what I'm saying? So this is saying 70%, you're gonna go 70%, you're gonna go into stocks. I'm going to stocks. I'm going to, your Apples, your Microsoft, Nvidias, TSM, Palantir, Broadcom. You buying 70% in the individual stocks. You go 20% in index funds, ETFs. I mean, VOOs, VTIs, SPYs, QQQ, XLK, 10% in bonds or cash. See what I'm saying? All right, step 3, select your investments, growth stocks. And remember what I told you before. Okay, if you're like, okay, what is a growth stock? What is an ETF? What is a bond? What is a growth stock? What is a dividend stock? Remember I told you, if you come across something you don't know, go to Investopedia, search it up. It's going to tell you what that is. It's going to give you a very, very, very detailed breakdown. Very detailed breakdown. Investopedia.com. If you come across a term or something that you're not familiar with. So growth stocks, that's in 30%. Focus on sectors like technology, healthcare, renewable energy. See, it's giving you great information. It's telling you where to start. It's telling you where to start. These are sectors, they ain't going nowhere. These sectors ain't going nowhere. This is great. This is great advice, great information. Example, it's even telling you companies. It's even giving you examples. So it's telling you the sectors, and then it's even giving you examples. Tech, Microsoft, Alphabet, Google, Nvidia, amazing companies. It ain't telling you no wrong. AI and semiconductors, AMD, ASML, TSMC, ain't telling you nothing wrong. Healthcare, Moderna, Pfizer, some Eli Lilly in there. Dividend stocks, 20%. Choose companies with consistent dividend payouts. It's telling you what to look for. It's telling you what to research. Example companies. It's telling you utilities, Next Era Energy, Duke Energy, Consumer Staples, Procter and Gamble, Coca-Cola, REITs, Reality Income, American Tower. See, it's telling you where to start. And then they're like, okay, I know about some of that. Like, I've heard about Microsoft. I've heard about Alphabet, Google, Nvidia, all this. Go and research it. Then that's when you go and you start looking into their financials. And I'm going to show you something else on ChatGPT right after this. So go here, index funds, ETFs, 20%, broad market exposure, reduced risk. Examples, giving you examples to look into. S&P 500 ETFs. Remember we talked about VOO, tracking the S&P 500. SPDR Spider ETF, SPY, international exposure. VEU, bonds and cash equivalents, stability during market volatilities, even telling you why you would want to balance that way. Options, treasury bonds, iShares 20 plus, corporate bonds, cash equivalent. Remember, you don't know what this is? Go to Investopedia, look it up. Do your research. Remember, this is to get your wheels turning. Remember, you said, I don't know where to start. This is giving you amazing information on how to start and what to start looking into. And then once you go down this rabbit hole, you're going to find information and then you're going to start to get there. You're going to start to get there. Ask me how I know. That's how I did it. Seek the information and you're going to find it. Number 5, sector specific ETFs. It's optional, 10%. If you want exposure to specific things like AI, SMH. Semiconductors, SMH. You want tech, XLK, QQQ, S&P 500, VOO. So it's telling you AI tech, Lobex robotics, artificial intelligence. This giving you some different ETFs, renewables, CLN. Then step 4, investment strategy. It's going into dollar cost averages, something I've talked about before. And this is saying invest $800 to $1,000 a month over 2 to 10 to 12 months to mitigate volatility. Hey, plug your own amount in. It can be $100 to $200 a month, $50 to $100 a month. You plug in what you can do into these strategies, dollar cost averaging. We've talked about that. It's a great strategy, the way to get started. Lump sum investment. If you got $5,000, $10,000, $1,000, $2,500, $500 sitting on the sideline, a stock set a great price like AMD was 52 week low. Drop a lump sum in, immediately allocate the entire amount as per diversification plan. Reinvest dividends, automatically reinvest dividends to compound growth. Talk about this in another video. The drip method, you know, the drip method. Reinvest in those dividends so you can take advantage of the compounding interest and the growth over time. Step 5, monitor and adjust. Look over what you're doing quarterly. You might want to restructure some things. You might want to double down on some things. You might want to pull back on some things. You might want to take some profits. So you gotta actively manage your portfolio. Rebalance if allocations drift by 5% or more. You can determine that once you start getting a little more experience. Stay informed, follow earnings reports, market news, and sector trends. That's why I told you have to be watching things like CNBC every day. Got to be reading articles, paying attention to the news. Once you start investing in something, you need to follow that company. Yahoo Finance. Remember, I told you how to look at them earnings reports dates. You got to stay tuned in. Avoid emotional decisions. You can't be emotional in this game. You can't be emotional. You can't. You see that price drop? You've done your research. You believe in that company. You know what they're about. That's buying opportunities. You feel me? We're not getting shook out the market. We're not selling. We're not selling low and buying high. That's what happens when you invest emotionally. We're not doing that. Take emotions out of it. Believe in your research. Believe in the company. Know that you've done your due diligence and double down on what you believe in. See what I'm saying? Step 6, tools to use, brokerage accounts. Remember, we talked about that. Robinhood, Fidelity, Schwab, Vanguard. This is crazy information. See what I'm talking about? And I got this all off of a sentence, putting it in ChatGPT. All of this. You're saying, I don't know where to start. Utilize these tools. That's why we say everybody should be using AI every single day, because you can use this for a lot of things, not just this. Research platforms, Morningstar, Seeking Alpha, Yahoo Finance, tax efficient accounts. Consider a Roth IRA, traditional IRA, tax advantages, especially from entrepreneurs. You don't have a 401k, get your IRA. Start writing off some of that. It's tax deductible. In traditional IRA, Roth IRA, pay the taxes up front. Don't pay taxes on those earnings. And this even give you an example portfolio. So remember, we said $10,000 in 2025. It's telling you, giving you the growth stocks, dividend stocks, index, bonds, sector specific, cash reserves, giving you the percentages. It's even giving you some specific companies in this breakdown, giving you the amounts, showing you how you should structure your account, giving you an idea of what you may want to do, So this is amazing, amazing, amazing information. Let me show you one more thing. You say, okay, I seen NVIDIA right there. Tell me about NVIDIA. Give me an overview of NVIDIA. Give me a breakdown of NVIDIA. It's telling you when it's founded, where the headquarters are, the founders, the CEO, core business areas, graphics processing units, GPUs, data centers, AI and software ecosystems, automotive, gaming, metaverse, and XAR. It's giving you some information on the financials. How much of their financials are made from data centers, gaming, automotive, growth catalyst. You see what I'm saying? Key competitive advantages, market leadership in GPUs, AI machine learning, challenges and risks. You want to know all of this. You want to know what a company does well and what a company doesn't do well, so that you can make a sound decision. You want to know if that company is a moat or not. Competition, supply chain. It's telling your competition, AMD, Intel, Broadcom. And that's when you get to diving in, going down the rabbit hole. You may think, okay, you talk NVIDIA, they make chips. Where do they get their chips from? Go down the rabbit hole, TSMC. Nvidia get the chips from them. How does TSM make the chips? ASML. You see what I mean? Future outlook. I just talked about this in a video today. You have to do your research. We ain't just burn companies blindly. We need to know what's the future outlook so we can know that this company is going to continue to grow and provide us appreciation on our investment. You see what I'm saying? So I just wanted to show you this, man. AI, ChatGPT, Gemini, Grok, amazing resources to find information, get started on your investment journey today, man. So to show y'all that, man. Mess with your boy, man. Mess with your boy, man. If I gave you some good information today, send this video to somebody, please. Send it to them. They want to know where to start. This is where you can start. See you on the next.